All right, let's get right into it. We're talking about order blocks, specifically the institutional view.
You've probably felt this, right? I mean, it is one of the most frustrating things in trading. You spot what looks like a perfect order block, you take the trade as soon as price gets there, and boom, you're stopped out almost instantly.
And then what happens? Price reverses and heads straight for your target, but you're already out of the trade. The reason that happens isn't because the order block was bad. It's because you're looking at it from a retail perspective.
So let's start by breaking down what I mean by that. We've got to look at this retail trader's trap first, because once you see it, you can't unsee it.
Here's the core mistake. So many traders treat an order block like a simple line in the sand, like basic support or resistance. The moment price touches it, that's their signal to jump in. There's no thought about the why. No context, no confirmation, nothing.
And this leads to that painful cycle we just talked about. Price hits the block, you enter immediately. You put your stop loss in the most obvious place, right below the low or just above the high. And then wham, a sharp move comes and wipes out all those stops before the real move even begins. This isn't just bad luck, you guys. It's how the market is designed to work.
And here's why it works that way. All those predictable stop losses, they're not just your protection. They're giant pools of orders. They're liquidity. And the big institutions, they need that liquidity to fill their huge positions. So the retail trap, well, it's actually the fuel for the institutional move.
So how do we get out of this cycle? Well, it all starts with a huge shift in how you think about these zones. We need to stop seeing them as entry signals and start seeing them for what they are.
And this really says it all. For retail logic, it's an entry signal, a green light. For institutional logic, it's just an area of interest. It's a spot on the chart where they start paying very close attention, but it is not a place to enter. Not yet, anyway.
I love this quote because it's a huge reframe. You see, when price slices right through your zone, it's not because the order block was wrong. It's because the timing was wrong. The market just hadn't shown its hand yet. It wasn't ready.
Okay, so if an order block isn't our entry signal, then what is? Well, the institutional approach isn't about a single trigger. It's more like a patient, systematic checklist. It's a sequence of events that has to play out before a trade is even on the table.
And here it is. This is the sequence, the 3 green lights you have to wait for. First, you need that liquidity sweep. Price has to run those obvious stops and grab the fuel. Second, you wait for a market structure shift. You need to see a clear sign that the direction is changing. And third, you wait for displacement, a powerful, energetic move that proves the big players are now in charge. If you don't get all 3, the setup is off the table. Simple as that.
So let's just quickly break down why this checklist is so powerful. The liquidity sweep, that's the engine getting its fuel. The market structure shift, that's the signal that the driver has turned the car around. And that displacement, that powerful move, that's proof the driver has a foot slammed on the gas. This process is what filters out almost all those frustrating fakeouts.
Really, this whole thing, this entire institutional approach, can be boiled down to just asking a different question when you're looking at your charts.
See, the retail question is all about location. Is price at an order block? But the institutional question is about timing and context. Is the market ready to react here? It doesn't assume anything. It demands proof. It waits for the market to show its hand with that sweep, shift, and displacement. That's the whole game, right there.
And that brings us to the single biggest takeaway. If you only remember one thing from this whole explainer, let it be this. An order block is a zone of interest. It's where you start watching very carefully. It is not an automatic entry signal.
When you start waiting for that confirmation, you stop being the liquidity that gets hunted, and you start trading alongside the institutions that are doing the hunting. You're no longer the fuel, you're just following the fire. So if this changed how you see things, hit that subscribe button. We're all about bringing this kind of clarity to price action.